Hello, viewers, and welcome to this week's edition of snsr360 Investor. And today we are going to do a weekly wrap. Okay, so in the weekly wrap, we do cover pretty much all corners of the framework. And I've expanded the weekly wrap, as I had mentioned in the last video that I did. So we will be extending the topics, and these will uh, change now and then. But for the most part, this is what we're going to be covering. So best performing stock pick, as always, market update. We'll take a look at the top caps stocks and earnings. We'll start to add earnings. And then over here, industry velocity, Sense 100. News segment, mechanical trader, sector allocation. And also we'll start to introduce an ETF here or there as well. So that's the new show, and it is expanding. Additional items will be added. Okay, before we begin, quick word about the disclaimer. Please pause, read, and then continue. Thank you. Okay, so without much further ado, let's take a look. So there's two picks this week because there wasn't a video last week. So this is from the prior week, and we can see that over here. That's what the week looked like going into the weekend, and this stock was on the list, and we can see what it did here. It actually had quite a strong move up, and since then it's had a small retracement, and that's what we're looking for, pullbacks preferably. So Root is provides insurance products, and generally the insurance sector is pretty strong currently. And this one's focused on property and casualty, not too big, with 680 employees. And the best pick for this recent week is PODD, and we can see that this one actually moved up as well. A lot of the stock was moving down, right? It was moving down, and so pretty good performance in a bad week. So best house in a bad neighborhood scenario. The company is Insulet Corporation. It's in the healthcare device, medical devices, 3,000 employees, and manufactures sells insulin delivery for people with insulin-dependent diabetes. A lot of stuff around diabetes, and a lot of companies moving into this space. Okay, so now let's have a look at the the market, and here we can see that, as pointed out before, the uptrend has, it's kind of started to go flat, and so we haven't pulled back, but this is a sideways digestion in time, which is indicative of kind of being in a correction in a different form, where we kind of tread water versus pulling back or moving into a correction. We can see that there is a little bit more down days in the mix than up days over the last 4-week period. We're also starting to see a continued showing up of distribution days, and we are getting some dropped off because of the time period. But the key thing to note here is that we did break the 20-day moving average, which is a kind of a key marker for us. And that's about the time when last week IBD moved it into a market in under pressure. And now we're sandwiched kind of between the 20-day and the 50-day moving averages. So this coming week will tell us, a little bit more info with price action as to which direction we may be headed, but certainly not a lot of strength going on here. And so let's have a look at the new visual for you. All right, so in this visual, this is 1 week's performance in the stocks in the S&P 500. So kind of look at the green and the dark green. So what you'll notice is that pretty much the Mag 7 turned up. The Meta was kind of flat. Tesla, Amazon, and then we have some other large stocks like Walmart, Costco showing up for the game as well. So money's kind of went back into the Mag 7, or it's being parked there. And then outside of the Mag 7, you can see that, it wasn't, there wasn't much else that's lit up in green. So broad selling across the rest of the stocks. But as we've seen that throughout 23, it was really the Mag 7 that carried the indexes. And so the broadening out, um, not looking so broad at the end of this week. So it's worth taking, so we know where the money rotated to or back to. Okay, quick look at the S&P 500 itself. This is the daily chart, and the one thing we can see that we have, obviously, in the shorter time frame, which is at the bottom down here, we can see that's now inverted. So we've got a little short-term correction. The intermediate term is about to cross down over here, which if it does, then that means we've got a pullback for sure underway. So we're probably in dip territory now, maybe a pullback territory. But the long-term view is starting to ease off. So there is some weakness in the longer-term trend as well. And we'll watch those markers in the weeks ahead. And so this is a chart that I have shared in the past. It's one of my key breadth indicator type of charts. And we can see, obviously there are more stocks now below the 40-day moving average than there were a few weeks ago. So we've had quite a move down. So a lot of stocks are now below the 40-day moving average, and we can see that the S&P 500 itself has come off its top as well. So now we'll look to see if breadth can consolidate somewhere, and either we get an event turning up and the pullback correction is over, or we'll test and see if there's a deeper pullback to be had. Okay, on to the Sensor 100. So I introduced this a few weeks ago, and just for those of you who have access to the website, you can access it from your respective menus. Just go to Sensor 100, click there, and then you will be able to bring up a list of what's in the Sensor 100. If you don't have access to this because you're not part of the website, that is free to join, and just send an email to simcom1999@gmail.com, and you can enjoy the benefits of being able to see this list and a few other things. Okay, something that I used to have a separate group with, and so that's now going to kind of collapse into the weekly discussion, is earnings. And one of the reasons I'm bringing this back into the mainstream is because of this. Hedge funds are embracing these near-term AI beneficiaries, according to Goldman. So this is a report, and if you have CNBC Pro, you can actually read the report. But hedge funds are leading adopters of AI because they have vast amounts of data and have access to vast amounts of data. They're building out their large language models, LLMs, and they're putting over, obviously overlaying Gen AI and etc. Now, I do know, because I did research and study this a little bit, one of the areas that they are heavily focused on with the LLMs is in the area of earnings. And this would make sense because obviously earnings is what drives prices, and Wall Street, runs off earnings and estimates. So this, and taking a look at earnings takes a look at both. So this is an area that we will develop a little bit more in the coming weeks. So let's just take a look at this graphic from Earnings Whispers, and we can see, Monday through to Friday, this is the calendar, and some of the, we can see what's going to be reporting this week. Goldman Sachs, Charles Schwab, so the financials are reporting Monday. Then it broadens out a little bit on Tuesday, still some financials, but then you start getting some industrials showing up, more financials, and then we get healthcare Wednesday as we get kind of the kickoff into earnings. And then we start to, again, broaden out media services like Netflix and more financials. and then we end up in the end of the week again with even more financials and some consulting organizations. So these are from the S&P 500, and there are notable earnings to watch. And if you happen to have any of these, then definitely it will be on your radar. Okay, industry velocity. So there has been videos on this separately, and so this is going to start to come into the weekly wrap as well. And so on the left-hand side, with my velocity chart, and I'm just showing you a little snippet, and I'm pointing you at that silver has now come up to the top. So this has become, in terms of velocity, the leading chart. And then copper is in second place, and aluminum is sixth place. So we can see that building materials and metals, industrial metals and precious metals, are starting to take lead. And so here are the top five in terms of velocity. So you can look at these industries and then drill down and take a look at if there are any opportunities you want to explore for your portfolio. And we will take a look at one of those later on in the presentation. Another section that is new to the videos but has been discussed in Sensor before, it's the concept of the mechanical trader and just running mechanical systems. So definitely, you've been introduced to the leaders index and the basket. Previously, that actually closed out from the November uptrend run that we started at the beginning of November. So there may be a repurchase. We'll have to wait and see. And I'm just going to share something I shared with a long time ago in the Sensor meeting, just a graphic of how a model could look like in terms of returns. Okay, so this is the leaders index, just a snapshot, and this is from HGSI. And we can see that the index, which comprised of different holdings, it did break down an area that we watch monitor for. And because of that action, the index at the current moment was closed out. So this has gone flat, and returns from November are pretty good. So a pretty strong showing there. And we did jump in and out a few times in terms of trading per the rules of the mechanical trading system. And next up is a different mechanical system, and this shows this started out in 2015, and you can see how this has fared. Now, a couple of caveats on this one, where this is actually the model and not the actual portfolio, because there are a few factors, like if this is a taxable account, your equity curve would be lower because each year you'd have to pay taxes, and that would reduce the equity in your portfolio. And then there's slippage, because the speed at which you catch the signals and act on them. So that you could miss a signal, you could be delayed to a signal, and obviously that would have a bearing on your final equity curve. But if you were able to follow to perfection, to the letter of the trading system, this is what the returns would look like. And as I said, just beware of the caveat. But certainly an impressive showing, even if you have this in a taxable account, even if you have slippage, and even if you were able to, even if you did miss out some of the opportunities. Okay, so I mentioned that we would have one ETF to watch, and this is something that I picked out from the industry velocity since silver has shot up. So let's just take a look at one opportunity, and this is actually the in terms of an ETF for silver, and we can see actually it's not necessarily ETF, but SVM, and we can see that there's an area of resistance. We've got a strong showing. If we break out above this, and then I think we're going to run on our hands. So silver, from an industry velocity perspective, and it's showing in terms of some of the holdings, is definitely showing an area where this the constituencies in this industry are beginning to perk up, and so now I want to look for an entry point for whichever system you're following. All right, so I'll also introduce sector allocation. So this is for the SGSG portfolio, which is a portfolio holding quality stocks, quality growth stocks for the longer term than position trading or swing trading or day trading. And so this is the current look after the quarter end moves, and we can see that between tech and communication services, portfolios makes up the good 40% plus of the overall holdings. One small holding, small company, basic materials. So typically that's not a growth sector for us, but you could get small companies that start to show up, which may have promise. And consumer cyclical, so this is always going to be a strong feature since much of the economy is based around the consumer. And then we have financial services. So where we are in the economic cycle, would expect financial services and industrials and the growth aspect of healthcare to start to show up. So a fairly well-balanced portfolio and asset allocation for now. So this is updated, reviewed every couple of weeks or so, and we can start to show the comparisons in later videos where we can say, at the end of one quarter, where it was at and how it's shifting over a period of time. But because these are large percentages, they're not going to be material. So, this pie chart is good enough just to give you an indication of where the money is allocated. Okay, so that's a weekly wrap for this week. Hopefully you enjoyed some of the additional segments, and we will continue to build up on those and start introducing a few new ones until we get to a cohesive presentation. Thanks for watching this week. Thanks for listening. Goodbye.